Hello, this is Compound Interest Stock Guy, and in this video I'm just going to expose why some of the cannabis investors are the most courageous people in the whole stock market, and I'm going to share reasons why, so stay tuned. If you're new to the channel, please subscribe. It helps my channel grow. I appreciate it. I also want to disclose I'm not a financial advisor. This is just for entertainment information purposes. Do not buy or sell based on anything I talk about. Buy or sell after you do your own research, due diligence, and you like the investments you're pursuing. All right, so being in the cannabis investing space it's all up to what headlines say about cannabis stocks, because retail investors are very sheep-like, so they can't think for themselves. So especially in the cannabis space. So a lot of them can't think for themselves. So they're basically, whatever a friend says, okay, go buy. And then they want to focus on that company because maybe they're getting money for promotion or anything like that, or they own a big ownership in that company, and they'll just say as much effing nonsense as there is, and that takes balls in itself. On top of that, you just have to listen to the FDA. They can drop the ball anytime they want to and say that cannabis isn't good, all this stuff like that. And the problem is Main Street, like Wall Street, is so behind visions that I have. They're so behind. I mean, basically, the whole world's so behind the way that I'm thinking, and some of the newest investor that ever came to the space, they're so knowledgeable to understand that this plant is going to be ginormous. And so that's called playing the contrarian play, right? It's easy to just say, oh, well, Apple's the biggest stock on the S&P 500, and everybody I know has got an Apple phone, so I'm going to buy Apple stock. And then it's like, oh, the stock goes up 15-20%, and then you go on like YouTube or whatever and you say like, yeah, I'm up 30%. I bought all the, what people fail to realize is, like, it's all good to be cocky about that stuff, but it's not real. The market's not real. It's rigged. It's rigged so that those companies will continuously go up. So basically, all the repo is they get money and then they buy up Apple and stuff. So then it keeps going up because that affects the S&P 500 because it's heavily weighted in the Apple stock. And then Apple buys back their shares, or they get some tax deduction or anything like that, right? And so it's set to keep going up, but it's only going to go up so much, right? Because there's other industries that are growing at way faster pace than Apple phones are, right? So that's what I'm invested into, right? I'm investing into a space that's growing ginormous. Okay, I know there's all the big LPs, they're bitching and moaning and blah 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 about how they didn't have enough stores in Ontario and all this stuff like that, and their quarter was bad. And basically I agree with them, but they should have overlooked that. They should have prepared for unexpected instead of guide the investment community that it was going to be like straight, like no problems. So what happened is with basically, I don't know, it's a lot of the world, it's going so fast, right? So basically you had cannabis companies that back 2 years ago that they were doing $5 million was a lot of money for a company to do 2 years ago. $5 million a quarter, that was a big number. And MedRelief was doing about 10 million at the time, and that's pretty much when they got bought out for 3.2 billion by Aurora. Okay, so they got bought out based on 100 price to sales. 100 price to sales. Okay, they weren't making money; they were losing money, but they got bought out at 100 price to sales. Now they had great technology and all that stuff, but so then come 2019, where you got companies that are doing 20 million, 25 million, and their market cap isn't even in the hundreds of millions of dollars right now. So I mean, it's just so crazy how things move so fast and how it's so wild. The valuations, the discrepancies in the valuations, all that stuff. So you're always on the watch out. It's like, yeah, I think this company's going to grow their revenues, and you're always at the beck and will of the analyst community and the institutions, because it used to be, okay, the company would go up just based on hype, and now it's based on revenues as well as EBITDA. Those are the main two things, revenues and EBITDA. Are you positive EBITDA or negative EBITDA? Those are the two things that every big company is trying to do. I mean, there's companies such as GRWG and, there's like IPR, and Planet 13 didn't do it this quarter, but there was more last quarter. True Leave, obviously, and MaryMed, that they're doing a net income, but that is pretty much the exception. So it's very rare, and because they're in such a hyper growth stage, they're based on EBITDA. So now retail hasn't caught up to the fact that that's what the institutions and the analysts are looking for. So they're also looking for net income, and they're looking for how much did the company net loss. So those are the things that people need to look at. But it's all, they can suppress all those, what they're trying to do as far as like make sure that those companies go up. And then eventually the companies you knew that were doing that good EBITDA and all that stuff, then when they want to push them up because they think that they should be at a higher price, then they'll do that. And it's all at the beck and will of the institutions. So you're trying to read what the institutions and the analysts are going to do. On top of that, you got so much negative publicity that can come from like left, right, and center. And, so many people like pumping this and that stock. It can be a fucking tough industry to play with. But there is some great fucking opportunities in the future. And I don't know. We're just getting there. But ideally, like basically, we should all be starting to reset our portfolios. I'm trying to do that. I made my Berkshire Hathaway portfolio, but I want to sell out of positions and get into that kind of portfolio, as well as have a more cash position, and then wait till next summer when things start to ride up, as well as get into real estate investing. So I'm diversified, but basically that is the way that things are going. So all these people that, it's easier as well to invest into just Aurora Cannabis or Canopy Growth, and then say the stock goes up, right? So you gotta give yourself a pat on the back. Maybe you're down on the month, maybe you're down on the year, all that stuff. But at the end of the day, if you have good companies, this industry's only gonna grow bigger, and the company should be around and be worth a lot of good money in time. So, I mean, I'm talking about the industries. Basically, we're at like 1.5 billion, like 1.25 billion of revenues for 2019 in Canada. And then in USA, that like the public companies are over about like 3.2 billion per year based on a quarterly times 4 basis. So that's getting to be like $6 billion just in public companies that are making that money. per year. So then in the next couple of years, when they start getting up to the tens and the 15s of billions, because every country is going to just open up like slowly, like slithering, and they'll have some CBD products, or they'll have some, medical cannabis that's available, and there'll be maybe like 5,000 patients in the first 3 months, and then maybe 20,000 at the end of the year. But you got to look at it in the long text, because things can really compound. As my name says, compound interest is basically, so say you had 20,000 and then you just continuously get more and more every month. Before you know it, you're at like 200,000 patients. And Truliev's at about like 225,000 patients, and they're doing net income of 60 million a quarter. So you got to put that into perspective, that there's a lot of money to extrapolate from so many different places. It's just about understanding if we're going to make money on the companies. Are they going to get that net income? Because it's a do or die time. Not much more money unless you're Canopy or Aurora and Tilray and Cron. Are you going to get more money? So these companies need to generate good revenues and EBITDA and net income if they want to continue with their business. It's a do or die time in the industry. And this is the real talk from Compound Interest Stock Guy. Keep compounding your info, listen to my lingo, and until next time, peace. I'm out.